This is the Friday, February 7th, 2014 version of the Market Plus segment. Joining us now is Don Roose. Don, welcome back.
Thank you, Mike.
We're glad to have you with you. We're really glad to have you with you. We've got a lot of questions from Facebook and Twitter today. Big thanks to all of you for sending in these questions. We're going to get through as many as we can, and we will hang on to the rest of them if we can't get through all of it tonight. It could take hours. We've got a lot of work to do.
We've got time.
So we'll dive right into it. Clint in Atlantic, Iowa is curious, looking at this most recent rally in the corn market, when should he have all of his old crop corn sold by, and what do you see as the top end of this range?
Well, a lot of times when you look at the cash market, what you really have to look at is what's the basis level. And the basis levels, have really kind of peaked here as we've seen a pickup in cash movement. And for catch-up sales, probably right in this zone, the 445, 450 for the time of year you're at right at the present time. So we're at the top of the range. Then I think if you don't sell right in this zone, you're really concerned with more of a weather type of rally later on. So it's all time of year and what you have for opportunities and when you need the funds.
All right. And that leads really right into Dale in Bloomington's question, is watching this rally in the soybean markets. We're over $13. He's curious, how long will beans be able to sustain $13 pricing? As you mentioned, we're the only ones with that really tight stocks-to-use ratio.
Yeah, we're the ones that are really the tight situation in the world. So I would say that we're kind of on a ventilator. If South America begins to aggressively sell soybeans into the world market, which they're getting very close to, we think they'll sell about 1.5 billion bushels in the February slot. If China starts to roll beans away from the U.S. or starts to cancel soybeans, the top's in just like that. South America beans are about $1 cheaper than we are, so it's one, what you're up against. It's probably also a weather concern. Acres are probably going to be up next year, so that's, but near term we're going to be in a very tight situation if China doesn't cancel soybeans.
All right. And now you mentioned acres being up next year in America, and we're talking soybean acres. And that Daniel in Kansas and Adam in Litchfield, Michigan are both curious with the recent rally we've seen in Dees corn, not really rally, but strength relative to Nove beans. Are we going to see more producers who are maybe going to plant beans pull back to corn, do you think?
Well, we're of the belief that we didn't think the corn acres are going to be down that much to start with. The big thing that you have is you have about 8.1 million acres of prevent plant that's going to come back in. We had 1.7 million acres of CRP from September that's going to come in, so you're going to have a lot more acres. So we think that the corn acres are probably going to be down just to 1, maybe 2 million, but probably 1 million acres. Still going to give you a big carry out over 2 billion. And we think the soybean acres are probably going to be up somewhere in the area of 5 to 6 million.
All right. Now, where would that put us soybean carryout next year, assuming trend line? Yeah,
that would put us a soybean carryout probably up around 350 million. So you go from very tight to excess to actually burdensome just in 1 year, possibly.
Keeping that in mind, would this be a time to start making some new crop bean sales?
Yeah, it all depends on what you think of what the weather pattern is going to be. We think that probably we're moving more into an El Nino pattern, which gives you a chance in the summer, which gives you a chance for a more normal weather pattern. So we think we're in a supply bearish situation. We think up around 1120 on November beans probably are selling opportunities. Of course, you could have some weather spikes, but we think if the wrong thing happens, November beans could go down to $9.50 to $10.
Ooh, single-digit beans. It's been a long time since some folks have seen those. A couple years.
It has, but look back on your 03, 04 and to 06 or 05, 06 on soybeans. Went from 112 million carryout to over a 500 million carryout in just those 2 years. So we can do it. We did the same thing with corn. So those are the years you're kind of afraid of.
You bet. When the American farmer wants to grow some grain, we can grow some grain.
Particularly if we don't have weather problems like we've had for 4 years in a row.
That's true. Now, speaking of grain, Doug in Moses Lake, Washington, is curious, how much more can Kansas City wheat move?
The Kansas City wheat market, some of it's going to be dependent on the summer, but we do have a tighter situation in the wheat market. But we think probably, another 25, maybe 50 cents to the upside. But really what we've done is we've kind of balanced ourselves back. Technicals are positive, but we're overbought, so you're at some good resistance levels. We think that if the right thing occurs, you're putting in some intermediate tops across the board on the grains just around this crop report.
Okay. All right, the upcoming crop report will see some market movement.
That's what we think.
All right. Now, Dietrich in Homestead, Iowa, has a question. As we look at the meat demand, the run-up in the protein prices, he's curious, looking at the export side, will Russia step back into buying U.S. pork and push lean hogs higher? What are we seeing on the Russian side of this market?
Well, what we've seen is that's right. I mean, Russia has pulled back from the pork market, and you know, I think overall our export pace has slowed on the hogs. We think it's probably really more of a function of the currency than anything else. As currencies around the world, you know, are really having some issues. You know, they're more favorable for exports than they are imports. So I would say that the exports probably build back a little bit, but I don't see them getting, you know, just unusually strong back to the levels that we were.
Okay. All right. Now, Mark in Enterprise, Kansas, is wondering, with this harsh winter that we've had, and it looks like we're going to have some more cold spikes here on into February and March as we get into calving season, what kind of numbers of new calf losses because of this Arctic freeze is the market going to have to deal with? Is the trade considering that much yet?
You know, it's a good question, but we really haven't had a lot of conversations around that yet. I mean, it really doesn't seem to be a market force. I know we had big calf losses in South Dakota here, you know, a few months back. That really didn't come on the radar either. So my experience tells me that that's something that is usually not a market mover. It's some of the other more traditional things that we can follow: exports, how the beef moves, the cattle in the feedlots, that type of thing.
All right. Now, keeping an eye on the protein markets, Ray in Grinnell, Iowa, is curious, with the PED virus in hogs, how much feed demand are we going to lose with the losses in pork? Is it going to be substantial? What are your thoughts?
Well, I tell you, that's a good question, because in the last quarterly report, the government had the feed usage up substantially. Really, for the number, the livestock numbers, it didn't make sense. So that's a risk, and we think that in the next quarterly report that could show up, that we actually have the feed use goes back in line, because the numbers are down on cattle. They possibly will be down eventually on hogs, but remember, the hog numbers have actually been higher here so far, not lower.
Right, really fighting for expansion in the face of PED.
Yeah, I mean, that's right. I mean, our total overall production's been up like 3.5% the last 6 weeks.
Wow. Wow. All right, now we've got a question, kind of a group question, it sounds like. The coffee shop in Groton, South Dakota, is curious, if a producer is fully hedged for 14 corn, where should he concentrate? Call options, short-dated calls? How do you market? What are your thoughts? Well,
the best thing to do is, you know, not to lose your, you know, it depends on where you have it hedged, but actually you can say it from any place. What I would advise doing is buy at-the-money calls and then sell calls above them, and probably between those two, a window, we call it. You know, like buy 460 December call, sell 550 call, spend 20 cents for that insurance protection until you find out what the weather's going to be.
All right, and just play it that way and hopefully make some money.
It's a good insurance policy is what it really is. You've got the crop sold, you feel comfortable with it, and this is an insurance policy.
All right. Well, thank you so much for being with us, Don. I think we got through nearly everybody in record short time. Much appreciated.
Thank you, Mike.
And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we'll continue to get expert analysis right to you. Have a great week.